You're watching Famous Dave on YouTube.
Hey friends, coming into the trading day yesterday, we were faced with a very negative futures, and the news story that broke was that the markets in China had sold off a lot due to the tightening of lending requirements, which had really forced a couple property management firms to kind of panic and to try to make payments on time. One of them was Evergrande, which the thumbnail of this video is about. And we saw the market kind of try to rally back a little bit. Let's take a look at the price action during the day from yesterday here. And you can see, well, you can't see anything now, so let me get rid of this background and we'll pull it up here. You can see that we sold, this is where the day starts, right around here. You can see us selling off and then rallying back at the very end of the day. And you see the rally back has this big volume spike here. And as the title of this video alludes to, I would consider this a capitulation rally. And what the concept here is basically people, obviously the market is, these days people say, well, it's all based on computers, the market. But in the end, it's people pressing the buttons that decide what the computers do. And thus emotion is involved in the market. And as the selling continued yesterday, people got more and more panicked, sort of, and sort of gave up. And you saw the stuff going lower and lower. I remember I was watching the E-minis. It was down like 115, 116. And I was also watching GME because that's the one I've been trading lately. And GME had similar sell-off here. And at a certain point, everybody, or not everybody, but a certain group of people just kind of give up. And they're like, this isn't happening. This is the end. I just got to get out. The market's going to zero. We're going to crash right now. And I just got to get out. And you see the selling steepen up. And a lot of times when the selling does get the steepest and people, a certain contingent just gives up, that is the bottom, right? And in a way, you kind of had clues to this in the GameStop price action. Let me see if I can get a better look at this here. But because the price was not like given up on as much in GameStop as it was in the E-minis. I might be able to overlay these two here. Let's compare with the, and also the Dow Jones, of course. But here's S&P 500. The charts look similar. The purple one's the S&P 500. And you can see at the end of the sell-off here, the S&P 500 was still going down. But the GameStop kind of paused here and just went sideways for a bit before it rallied. Whereas the S&P 500 actually did have more of a capitulation situation where it went, it seemed to get steeper, the sell-off, and then all of a sudden, when everybody had given up, you get the rally here. And I think it's significant that there was this big volume spike at the end of the day. And this worked out for my GameStop. What I ended up doing was around here at the 195 area. Let me take off the study so we can see it a little bit better here. And I have a couple orders in already. That's what this red is. Around this, I'd say 191 area here, I sold a couple call verticals. A December call vertical and a November call vertical. And then down here, I bought back the next lower strike to form a butterfly. So in one case, if we look at my trade activity here, in one case, I sold the December this one right here. I sold the December 200-210 call at 320 was the price, and this was around 1240. And then I bought, so that was the 200-210. And then I bought back the 190-200, paid 352. So net, I paid 32. I've outlaid a total of 32 cents here overall. So essentially, I legged into the butterfly, paying 32 cents. And then in a similar situation here with this November 202-207. I sold this call spread at $1.32, around 123, and I bought the next lower one, the 197-202, paid 150. So you've got 150 minus 132, which is 18 cents to leg into the butterfly there. And so I have a small short gamma position here. If we look at the gamma, which I don't have up here, so I will add that. Gamma. If we look at the gamma, it shows short like 1 or something like that. Yeah, 151. That means for every dollar this moves, the delta or the stock equivalent is going to move against us by $1.51. So here it shows us short 4. It shows us long 4.5 deltas. Up another buck, we would be long 4.5 minus $1.50, so 3 deltas. Up another buck, we'd be long 1.5 deltas, and up another buck, we'd be long 0 deltas. That's kind of when you're short gamma, your delta moves against you as the underlying moves. So essentially, if I hadn't sold the call spreads, I would have been quite long down around the low yesterday, which was 184. And so selling into the sell-off, selling the call spreads, it kept my delta relatively close to 0. Then when we got down here, it really felt like this price was stabilizing here, and as the E-mini continued to move lower, and I ended up buying back the call spread. I figured, in my mind, I was thinking, well, I probably shouldn't have messed with this position anyways. I probably should have just let it sort of ride, since it's a defined risk position. I was going to just leave it alone. But due to the fact that I had sold a couple call spreads up above there, I should maybe try to just lock in a good trade with those call spreads by doing something, buying some sort of delta down here. And that's what I ended up doing. And it kind of worked out, because right after I bought the stock, it showed my delta as like long 30, and the stock rallied $10. So that was, or $9 or $8, I mean. So that worked out. But the concept here is capitulation, and you see this in a number of ways. It also occurs when we have like a big down day or two. It's when you have a down market that's just grinding lower, like just down a little bit. It's not really, there's no real energy, like you don't feel people panicking or anything, but it's just grinding lower. That, to me, is more scary in a sense, if you're long, than a market that's just going straight down and some people are giving up. Because a lot of times when people just kind of give up, that's going to cause that kind of rubber band effect where it pops right back up, which is really what we saw yesterday. And, GameStop has been a very resilient stock as far as the nature of the people that own it is different than in a lot of other stocks. And people seem to be these like super fan type people who, when it goes down, they want to buy more. When it goes, when it goes up, they want to buy more. just one look at a chat room where people discussing GameStop, the stock could be down $10 a day, and the comments are extremely similar to when the stock's up $10 in a day. People are like, "Oh, this is awesome! It's down. I can buy more." It's like the comments are the same regardless of the price of the stock, and that kind of speaks to the nature of people that own this, who are like, they don't seem to be very price sensitive. They're not sensitive to earnings. They're just committed fans of the stock. And regardless of that, if the stock tanks enough, people's sense of greed is going to get eventually going to allow them to try to get out of the stock. Maybe it's not a sense of greed, it's just rational thinking, and I don't think that this is going to last forever. But up until now, if you had told me 6 months ago that this would still be hanging around the $200 mark, I wouldn't have believed it. But it has remained very resilient, this stock. Here's the chart of it here, and continues to be so. So our position right now is fairly tame. Long 5 deltas, collecting $60 a day, with gamma, as we said, of short 1. And the position is essentially we need GameStop to stay between 140 and 240. So we have a $100 range in a slightly less than $200 stock over the next 60 days. So seems reasonable. We'll see what happens, though. Thanks for checking in with me again today, and I will see you next time. Until then, let's talk about the VIX just for a second. VIX did get up above 25 yesterday. You can see this spiky spike here. Now, the chart of the VIX, although it looks like it's always moving lower from this chart, this chart of the VIX just oscillates up and down. Don't get it confused with VIX ETPs. VIX ETPs like UVXY or VXX, they slowly move lower over time. Conversely, the inverse SVXY slowly moves higher over time. But the VIX itself just oscillates, and if we back this chart up a little bit more, we can see that. But definitely a pop yesterday, a good spot to short this, and if you did, congratulations. But I know the best times to short the VIX can be very scary, because it's when the everybody's sort of panicking and stuff. That's why the VIX is higher, because people are sort of panicking, and it can be hard to pull the trigger. You know, we did get UVXY over 30 yesterday, which is first time in a while that it's been over 30. And that was obviously a great opportunity to short this. And you can see it just in the last few minutes as the market rallied back. We had the VIX make this, the UVXY made a 4-point move down. It was boom. And that was quick. And just corresponding to the quick rally we had in the market yesterday. And, the market looking kind of healthy as we bounce back from that little one-day panic. Now, that was a trading opportunity, that one-day panic. And certainly we could move lower today, but there was certainly an opportunity in there. And obviously some people got hammered by selling the bottom here. And it's easy to get caught up in the drama and sell the bottom. There's some famous quote that, that the smart trader buys when everybody else is selling and sells when everyone else is buying. And that can be true at times. However, as I stated yesterday, market crashes are pretty rare, and they're predicted all the time by people, and most of the time the people are wrong. Every once in a while somebody will be right, and they will let you know it over and over again, but usually they are wrong. So be careful with short positions, because the odds are against you. So if you're engaging in short positions all the time, you're eventually going to start losing money, because the markets tend to move higher slowly. I know that should be obvious to people, but sometimes the obvious escapes traders. All right, thanks for watching. We'll see you next time.
You're watching Famous Dave. On YouTube.
Hey, Edward, thank you for your comments about checking the chat. I have shopped at GameStop in my local mall. I actually signed up for just out of curiosity, I guess maybe you could call it market research. I did sign up for a GameStop, not job fair, but I signed on to their website of available jobs because I'd heard that they were releasing a bunch of new jobs in the community, and so I signed up and to see their local job listings, and they indeed are listing a ton of jobs. They do have a GameStop in my local mall, and I have been in there several times previous to any sort of interaction I've had with the stock. Thank you for your continued support, Edward, and everybody else, and we'll check you next time. Bye now.